Good morning. Welcome to this Fortnightly Market Outlook webinar.
I'm Devarsh from HDFC Securities, and today I'm joined by my two colleagues, Subhash and Nandish. Subhash will share his insights from technicals, and Nandish will talk about derivatives. And in the end, I will give you the summary for this video. So let's straight away jump into the global developments. Key developments over the last week, we saw stronger than expected labor and inflation data from USA, and we also saw that all the major US indices posted solid gains. The higher inflation is pushing the US Treasury yields higher, and that's a concern. Locally, Adani shares, after taking a severe beating, recovered sharply after a US based investor bought a large stake in them. The GDP numbers came in lower than the expectation. The GST collection numbers rose 12% YOY to 1.5 lakh crore. So higher inflation, higher global interest rates, geopolitical issue, El Nino threat are some of the concerns for Indian markets right now. Now let's look at the various asset classes and how they have fared over the last fortnight. So Indian rupee has found a resistance near 83 and corrected. Now it is trading near 82. The long-term support comes in around 81. Now let's look at the international markets. The S&P 500, the mother of all markets, it has rebounded, and after a brief correction, it found support near 3900 and it is moving higher. Similarly, Nasdaq also, after bottoming out near 10,000 level, it had a sharp rally of 20%, and after a brief correction, found support near 11,200 and now rebounded last week. The European markets are doing quite well. The FTSE UK markets are trading near all-time highs. Baltic Dry Index has reversed north from its long-term support, and that is a good indicator for the freight industry over the longer term. So let's look at the international indices first. Over the last 1 month, 1.5 to 2% kind of correction has happened in the American markets. After a strong rally, Hang Seng market have corrected by 5%. Indian markets also, in line with international markets, have corrected by 1.5% to 2%. While last fortnight we had a strong rally in some of the indices, PSU, realty, and banking are the outperforming sectors, while metal, IT, and technology stocks have corrected. So, in economic calendar, Indian markets are closed on Tuesday. On 10th of March, we will get the policy decision from Bank of Japan, and on 16th of March, the ECB monetary policy meeting is there. So, these are the two key events scheduled over the next fortnight. Now, let me hand it over to Subhash. Subhash will share his views from technical. Over to you, Subhash.
Good morning, everyone. This is Subhash from HDFC Securities. I'm a senior technical and derivative analyst. So I'll be giving the technical outlook for the next fortnight. So markets bounced back this week after the sharp correction seen last week. The week began with the Nifty moving lower and touching a low of 17,255 before witnessing a healthy pullback rally towards the end of the week. In the process, the Nifty has also reversed its recent short-term downtrend and closed above the 200-day EMA. So as we can see on the chart here, this is a daily chart of the Nifty. There was a downtrend and the Nifty bounced back last week and crossed the previous swing high, and it has also closed above the 200-day EMA. So the trend is now up for the short term. Market breadth was positive in only 2 out of the 5 sessions of the week. 14-day RSI has jumped and moved above its 9-day EMA, which is a positive signal for the near term. So while the intermediate trend is still down, Nifty is now in a short-term uptrend as it has crossed the previous swing high and now seems headed towards the next resistances at 17,857 to 18,004. On the weekly chart, the intermediate trend is still down as we are making lower tops and lower bottoms. And this week, we have just bounced back from the 50-week SMA. So it is likely that the rally could be short-lived unless it convincingly crosses 18,135, which is the previous intermediate high. Coming to the sectors, most of the sectors ended higher this week. Top gainers and outperformers were the Nifty PSU banks, realty, metal, bank Nifty, and Fin Nifty indices. Indices that underperformed were the Nifty IT, Pharma, and Auto indices. On the daily charts, most of the indices are in short-term uptrend and could therefore rise more in the near term. Bank Nifty has broken out of its recent swing high of 4773 and is now headed towards the previous intermediate highs of 42,016 to 42,235. Short-term trend reversal levels are at 40,500. So as you can see on the Bank Nifty daily chart, we have crossed above the previous swing high, and now we could be headed towards the previous swing highs of 42,016 to 42,235. So we expect Bank Nifty, Fin Nifty, and the PSU Banking Index to outperform in the next 1 to 2 weeks. Other sectors that are looking good are FMCG. It has bounced back from the 50-day SMA and has started rising. Infra Index also has bounced back from recent supports and risen quite well in the last 2 to 3 sessions. So that could also continue to move up. Coming to our outlook, Nifty remains in an intermediate downtrend, but with the short-term trend up, we could see more upsides in the near term. Immediate resistance is at 17,704, which corresponds to the 20-day SMA. A move above that could lead to our targets of 17,857 to 18,004. We expect buying across sectors like banking, financial services, FMCG, energy, and infra to help push the Nifty index higher in the coming 1 to 2 weeks. Broad market indices like Nifty mid cap and small cap also outperformed this week with gains of 1.97% and 1.25% respectively. So we expect the broad market to continue their outperformance in the coming 1 to 2 weeks. In terms of strategy, one could look at stock-specific opportunities in these segments. So the conclusion is that markets are likely to rise more in the near term as the short-term trend is now up. Upside targets for Nifty are at 17,857 to 18,004. Intermediate trend reversal level is at 18,135. Unless the Nifty crosses 18,135, we still remain in an intermediate downtrend. With many sectoral indices showing strength for the near term, this increases the probability of a further rise in the markets for the near term. The current short-term uptrend would reverse if the support of 17,306 is broken. So in terms of strategy, we recommend a stock-specific approach on fresh longs by focusing on outperforming sectors. That's all from my side. Thank you.
Thank you, Subhash. Now let's go to Nandish. Over to you, Nandish.
Good morning, friends. Welcome to this webinar. I am Nandish Shah from HDFC Securities. Today, I am going to discuss what the derivative data is indicating regarding markets. So let's straight away jump to the presentation. We have seen long build-up in the Nifty futures during the last week, where we have seen 7% rise in the open interest with Nifty rising by 0.74%. On the other hand, massive long build-up is seen in the Bank Nifty futures, where we have seen a 75% rise in the open interest in the Bank Nifty future during the March series till now, with Bank Nifty rising by 3%. Now coming to option data, Nifty open interest put call ratio rose sharply to 1.17 levels on Friday from 0.91 levels on Thursday. This sharp rise in the put call ratio is largely on the back of put writing at 17,300 to 17,500 levels, indicating 17,300 to 500 levels to act as a strong support going forward. On the other hand, Nifty is likely to find an immediate resistance in the vicinity of 17,800 to 18,000 levels where calls have been written. So as you can see from this option distribution chart, we have seen put writing at 17,300 to 500 levels, while calls have been written at 17,800 to 18,000 levels. Now coming to FI's figure, short covering is seen by FIs in the index future segment during the last week, where the net worth was rupees 2004 crore with their open interest going down by 2116 contracts. However, if you were to see breakup of index future segment, FIs have created fresh long in the Bank Nifty futures, while long unwinding is seen by them in the Nifty future segments. This in turn indicates that FIs are more bullish in Bank Nifty as compared to Nifty. On Friday, we have seen first sign of short covering by them in the index future segment, where their net long to short ratio in the index future has risen to 0.3 as against 0.17 levels on Thursday. While this indicates FIs are still net shorts aggressively, history suggests that their long to short ratio has reached to an oversold level, and therefore there is a higher possibility of a short covering by them from here on, which could push indices higher. So this is the ratio of FI's long to short ratio in the index future. So you can see from the chart that during the last 5 instances, their long to short ratio has moved up from 0.15 to 0.20 levels. And here also we have started a first sign of short covering by them on Friday. This indicates that there is a higher possibility that FIs might cover their shorts from here on, which could push indices higher from current levels. So now coming to outlook, as I discussed earlier, we have witnessed long build-up in the Nifty future during the week. Sharp rise in the put call ratio on the back of put writing at 17,300 to 500 levels. First sign of short covering by FIs in the index future segment. Long to short ratio still at oversold levels, which in turn indicates higher possibility of short covering by them, and also their positioning in the index option segment. They net bought 1,13,000 contracts of calls and shorted 99,000 contracts of puts. All these indicators indicates that downside is limited in the market and one should remain optimistic for the market for the coming days. Therefore, our advice to remain bullish and accumulate longs with stop loss of 17,300 levels. On the higher side, 17,800 level to act as an immediate resistance where we have seen call writing. Any close above 17,800 level would result into further short covering, which might push Nifty to even 18,100 levels. Now coming to Bank Nifty, we have seen aggressive long build up in the Bank Nifty futures in the March series till now, as I discussed earlier. Sharp rise in the put call ratio on the back of put writing at 40,500 to 41,000 levels. Long build up by the FIs in the Bank Nifty futures. All these derivative indicators indicates that downside is limited in the Bank Nifty and one should remain optimistic for the coming days. Therefore, our advice is to remain bullish and accumulate longs with stop loss of 40,500 levels. On the higher side, 42,000 to 42,200 level to act as an immediate resistance where we have seen call writing. Any close above 42,200 level would result into further short covering, which might push Bank Nifty to even 43,000 levels in the coming weeks. Now coming to sectors, during the week, we have seen long build-up in the banking finance sector, cement sector, metal sector, and also power sectors. So derivative data suggests that these 4 sectors are likely to outperform for the coming days.
Thank you for that, Nandish. Now let's try to conclude. So, in summary, global markets are rebounding. Core inflation and headline CPI index suggest that they are headed lower, while the convergence is happening towards the inflation number and the Fed's target rate. Our markets have rebounded. Investors, traders to remain long with the Nifty. 17,300 should be stop loss for Nifty. 40,500 should be the stop loss for Bank Nifty. That's all for this video. We hope you like this video and find the information provided useful. If you have any comments or suggestion, do reach out to us. Thank you.